Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, March 2nd, 2022. The market's traded in a little bit of an inside range, a solid range, a very nice trading range, but still inside range, which didn't do much to change, excuse me, the count, but it did provide me with the opportunity to present an alternate view as to what is going on and how we can still get ourselves up to that 44.30 to 44.44 area to complete minor wave 2. And as I left off last night, I had put the minor 2 here and then had discussed that while I likely could count this as 5 waves down, it better counts as a 3 waves down, which would have left it if the market broke above, I think that was 43.26, would leave it in a 3-wave pattern. That is what took place. So what I'm now presenting is the possibility here that what we're witnessing or what we're dealing with is a double ABC pattern. So here's the first ABC. Those are normally separated by an X wave, which in itself is a 3-wave pattern. And then we get the next ABC pattern. So I can actually count a B, and a 1, 2, 3, needing another, and that's a 4, needing another slight new high. So what we basically, this is 43.99. We got to 43.99.25 this afternoon. So I'm like, well, yeah, we could go with that, but it's just not enough. So I'd hate to say, well, I'm going to put the 2 there, we should be collapsing, and we're not. And so basically what we're doing, I believe, is just kind of biding some time here, and that we're waiting for the buyers to come back in, and they likely will. We should get ourselves back up above 43.99, above 4,400, up towards that 44.25 to 44.30 area, but the whole zone is 25 to 30 to 44. That is the zone where I think then this whole minor wave 2 would be complete, and we'd have our double ABC. Now, I know that there's a lot of talk going around that, the market surged today because of Powell's discussing, well, likely just a 25 basis point, in March. Well, I think that's going to be a battle, because I also read the 2 others are saying that we're going to be raising more quickly, and that we're likely to start with more than a 25 basis points. So I think the battle will be on when the Fed decides to meet. But they're out for the next 2 days talking about our semi-annual economic views. And so I think there'll be a little bit of a discussion when the Fed meets. And we're going to continue, I believe, to see inflationary numbers coming out prior to that Fed. So the pressure will remain high. The fact that this escalation into war in the Ukraine is still involved, it will have an inflationary effect if it cannot be resolved and everybody goes home very quickly. All we need to do, folks, is just take a look at what's happening within the commodity markets. Take a look what's happening to crude oil. Crude oil is safely and securely now above $100 a barrel. I don't know what the next line is going to be, but it might be 125 to 150 a barrel. That's inflationary. And I don't care what they say about the numbers, it's inflationary. And we're going to have to deal with it as being the general public. Also, with wheat going through the roof, corn going through the roof, soybeans going through the roof, all in the front months, that is causing a lot of disturbance and will create even higher prices at the grocery store for us. So at least not forget that a lot of times they report inflation and they X food and energy. Those are the 2 primary factors within our inflation. So when we're seeing it still on the producer level, we're going to see it still on the consumer level. I don't think that Fed's not going to just relax and go, well, we'll try a 1/4 of a point and see how that works. In any case, for tomorrow, they'll be looking for 44.44 or up into that area. Again, the zone 44.25, 44.30, and then 44, 44. So if the market starts to break down from here, it is again going to have to break through the 8, the 20, the 50, and the 200. And it needs to do all of that in order to kick us below. And we're going to have to break 42.75 without a hassle. Now, last night in Globex, it got to 42.78, stopped on the dime, and they just started to rally it right after that. So we get an A, B, 1, 2, 3. Now, what's that? Maybe a 4. But again, if it starts to drop and it breaks there, it's going to be minor wave 2's completion point. All things possible, all things will come to us as the market tells us. Right now, we're allowing for an additional upside, but saying what needs to happen, what you need to see is that it breaks through all of this and it doesn't stop. It doesn't stop to take a rally. It just keeps on going. The initial drop should bring us back below 42.75 and actually start heading towards 42.50 and then 42.15, et cetera, coming on. That's where I'm going to leave it. The next update will be on Thursday, March the 3rd.